Hi everyone. Before I start the show, I'd like to thank iTrust Capital for sponsoring the show. iTrust is a crypto IRA that you're able to invest in crypto as well as precious metals, and you're able to do this with tax insulation, so you can defer your tax payments until you retire by using IRAs. So iTrust Capital has no monthly fees. There's a trade fee, but there's no monthly fees. There's an iPhone app. There's a Samsung app. You're able to use iTrust platform on your phone and able to trade 24/7, 365 days a year, as well as they have Fireblocks as Coinbase custody as their custodian, so your crypto is safe with iTrust Capital. It's institutional storage, and if you use my link, itrust.capital/Darren, you can get up to $100 in funding reward just by using the link itrust.capital/Darren. So be sure to check them out. Please take a look at what they have to offer and research IRAs. Don't bend, don't water it down, don't try to make it logical, don't edit your own soul according to the fashion. Rather follow your most intense obsessions mercilessly. Franz Kafka.
You know, we are at an inflection point, I believe, in the world economy. Not just the world economy, in the world. It occurs every 3 or 4 generations. As one of the top military people said to me in a secure meeting the other day, 60 million people died between 1900 and 1946. And since then, we established a liberal world order, and that hadn't happened in a long while. A lot of people dying, but nowhere near the chaos. And now is a time when things are shifting. There's going to be a new world order out there, and we've got to lead it. We've got to unite the rest of the free world in doing it.
We are at an inflection point in the world economy and in the world. A significant change in the world is coming. The governance of global affairs will have a new order. Money will be redefined.
I said on that program, too, New World Order comes, and usually comes through war. Now, he was talking about a shift in the world economy. He called it an inflection point. He said it happens every 3 or 4 generations, roughly 100 years. But we're actually on a cycle that lasts 30 to 50 years. Bretton Woods 1, 1944, Bretton Woods 2, 1971, and now Bretton Woods 3. Mark the date for the history books. Bretton Woods 3 just occurred, and a new world order is taking shape. Mao once said, "There is no construction without destruction." And that's what's happening to the financial system. This month, all of the G7 countries shut off the Russian central bank's access to nearly all of its foreign currency reserves, $630 billion. Now, if you're Russia, that money is now effectively gone. It no longer exists. So if the global financial system can just decide that your money can suddenly go poof, what the heck is money? Is this all a con? Why would the global financial elite reveal this charade? You know, it's almost like they want everything to come crashing down. They want the destruction in order to commence with reconstruction.
I was asked about Project Dunbar and if it replaces XRP. This new order needs trust. Project Dunbar and other CBDC projects are centralized systems that use cryptography. They are experiments by the BIS to swap CBDCs. When we talk about private and permissioned systems, that means there are a few that rule the network. They can remove funds from one account and put in another if they wanted to, whatever the nodes on the network agree on. Now, it may not seem like central banks are going to cheat the system and remove funds, but think about the sanctions that just occurred. Why would any nation other than the top nations want to use a platform that could freeze their assets? Private systems that R3 has built, Consensus or built systems where the few control the network. The other issues with private networks and a few nodes is those nodes secure the network. The more nodes, the harder it is to cheat Consensus or hack the network. If you are a hacker and you could corrupt 3 nodes agreeing on a transaction happening versus 100 nodes that have to agree on a transaction happening. Bitcoin maxis will tell me Bitcoin is set up for the reserve currency. Bitcoin certainly has a lot of nodes on their network. Every miner helps to decentralize the network. But when we're talking about nations using a reserve asset, it would cost $36 billion to control the Bitcoin network. Well, that's a lot of money. The US spends billions on a B-52 bomber. This would be a small investment for a country to take over the reserve currency. Well, what about proof-of-stake coins? Proof-of-stake coins allow the biggest stakeholders on the network to have the most say in consensus. So again, whoever has the most wealth can change the transactions. The XRP ledger, on the other hand, does not cost much to help decentralize the network. The more validators and nodes that a country would add would just secure and decentralize the network further. The IMF wrote a PDF on different consensus mechanisms a while back, and incentivized consensus mechanisms was an issue, i.e. mining and proof of stake.
About Saudi, and this person cites a Wall Street Journal report recently that Saudi's considering converting some of its future oil contracts from dollar to the yuan. I don't personally, I haven't confirmed that, but if it's been reported by the Journal and others, fascinating step. And the question is this a legitimate threat to the dominance of the dollar as the global reserve currency, or is that concern overstated?
Yeah, this is what we talked about earlier. It's a wave that you can see slowly coming, and that won't crest for 5 or more years, but it's coming. And, my worry is not entirely about the dollar as the reserve currency. That helps us because it keeps our borrowing cheap. It means we can borrow a ridiculous amount of money at very low interest rates. The other part I talked about, which is the payment systems, kind of the rails that run the financial system of the world, is that the West has been so dominant there that we say, okay, you want to send money from, Switzerland to Nigeria. Well, there better be know your customer, who's sending what to whom, when. There's a lot of regulations on that. All of this new fintech stuff we're talking about, we're like, well, whatever, we'll go through yuan, we'll go through currency pair through a cryptocurrency in here. And it's much cheaper, faster, better than Swift. And frankly, some American blockchain technology. I obviously have a bias here because I serve on the board of Ripple, which is kind of our foremost blockchain company. It's just way faster, way better, more accurate, way cheaper than Swift. And we're not pushing our technologies here. And so the Chinese are winning. So I think that piece is actually more important than in the short run than the dollar being the reserve currency, because it means we won't be able to do these SWIFT sanctions again in a couple of years.
There is an erosion of the dollar as a reserve currency. The XRP ledger is currency agnostic, meaning any currency can be added to the XRP protocol. Ripple is an American tech company. The protocol that can compete with China's payments platform is RippleNet. Now, Anya is saying that if we don't match China's payments platforms, we will lose dominance. If RippleNet were to have a large network, the US will have a say on the rules of RippleNet. While if China creates the dominant network, China will have a say on the rules of the network. China has a correspondent banking system that they don't have to follow KYC and AML. It's only when they participate in the US banking system, those rules apply. By losing SWIFT, the U.S. can no longer sanction, and by SWIFT being outdated, there is a need to migrate to a faster, cheaper, and more secure network. Anya Manuel is a Ripple board member, but she has helped written foreign policy with India and China. Her firm, Rice, Hadley & Gates. Rice stands for Condoleezza Rice.
I think we're going to see emerging market countries, including China, Russia, India, a whole lot of others, beginning to trade more directly using their currencies rather than using the dollar as a vehicle or intermediary currency. New technologies are making it much easier and cheaper to trade directly in those currencies without having to rely on the traditional reserve currencies. But having said that, it's going to be difficult to move away so quickly from a dollar-dominated financial system, because that's still the deepest and most liquid currency to trade in. And even if the dollar's role as a payment currency were to erode somewhat, it's still going to remain by far the most important payment currency. And as a reserve currency, I certainly don't see that renminbi or any other currencies posing a serious threat to the dollar. But as a payment currency, we are going to see some changes coming.
Like I mentioned earlier, the XRP ledger is currency agnostic. Every currency and asset can be added to the XRP ledger in a seamless fashion and used for trade. If we're moving away from the dollar from being a payment currency, that means countries will swap their currencies directly for goods and services in other countries. With things like pathfinding, a route of liquidity is found. So if a dollar is the preferred method for trade, currency 1 can be converted to dollars and converted to currency 2 in an automated way. So what's the role of XRP in this system? XRP is liquid against currencies that are illiquid. We have seen Ripple target areas of the world that have been de-risked, and big banks closed up shop from converting dollars to those currencies. So XRP is a pool of liquidity and illiquid assets in this network. If the XRP ledger gets to a level that is used on a global scale, that liquidity will continue to build. Not to mention every transaction, wallet, and asset requires XRP to be used.
Now, some would say the timing here was weird, but you and I know the exact timing on this is exactly what they wanted. The end of the executive order is what's most interesting. It says, quote, explore a U.S. central bank digital currency, CBDC, by placing urgency on research and development of a potential United States CBDC should issuance be deemed in national interest. Now, Biden can't force the Fed to start implementing a digital dollar, but he can urge them into action by declaring it a priority. This is what he's announcing. He's also trying to make it appear as if this is something new, as if the Fed hasn't already been working on it, and our Treasury Department. Spoiler alert, it's almost already here and done. Biden requested progress report within the next 6 months. That means we could see something major by as early as September. If they're already doing behind the scenes work, as Biden says, it's going to be scary because there already has been a lot of work. We got it all ready to roll out. Let me show you a collaborative effort between the Boston Fed and MIT. They have already claimed to have created the code for the U.S. digital dollar. It's called Project Hamilton. It's out in the open. The name is significant as Hamilton was the first to advocate for a central bank. And make no mistake, the digital dollar is all about centralization and control. That's why they say in these projects, we can't use blockchain because we need to be able to see. It's the opposite of what digital currencies like Bitcoin were created for.
Today it was announced that Russia is open to taking payments for international gas in Bitcoin. When it comes to our friendly countries like China or Turkey, which don't pressure us, then we have been offering them for a while to switch payments to national currencies like rubles or yuan. With Turkey, it can be lira or rubles. So there can be a variety of currencies that's a standard practice. If they want Bitcoin, we will trade in Bitcoin. A few weeks ago, King Solomon found a document that talked about the Central Bank of Russia testing the XRP ledger in RippleNet. RippleNet being successful on the global stage benefits the United States.
Trade, for a fact, we know that energy trade will never look the same again after this war. And we are likely to see some countries, reconsidering how much they hold of certain currencies in their reserves. So fragmentation is indeed an important concern. And we know that typically, and I've worked on this issue of what generates a dominant currency, is usually currencies have complementary roles. They have a role in a payment for payments. They have a role as a store of value. And if we find that there are parts of the world that are moving on to making trade payments in another currency, not the dollar, for instance, or they start starting to save in other forms of currency assets, then we could see pockets where we might see shifts happening. Now, the longer this war continues, and depending upon how it rolls out, and I'm just hoping that this ends as soon as possible, but we could see much more larger effects.
We know that energy trade will never look the same again. The backing for the United States dollar is oil.
That the pandemic accelerated digitalization overall, and the application of digital money is on steroids. I just want to give you one anecdote. We surveyed our membership on interest in CBDCs, in central bank digital currencies. And to our greatest surprise, more than 100 of our members are at some point of investigating the applicability of CBDCs, piloting CBDCs, and of course, some already having them in place. So when we look at this fast-moving development, we can break it in three buckets. One is central bank digital currencies. There, the most difficult question is interoperability. As Gita said, we see fragmentation in payment systems. Will CBDCs, based on different technologies, fragment it even more? And there we see a role for BIS, for the Bank for International Settlement, for us at the IMF, to build tunnels that connect these different CBDCs to make that fragmentation less damaging for the world economy, or even minimize.
There are multiple types of CBDCs. Synthetic CBDCs are currencies issued right on the crypto, like Palau did with the XRP ledger. They put the US dollar directly on the XRP ledger to be used. The other types of CBDC is retail and wholesale, where they can create their own rules, the walled gardens, and set up the rules for every citizen and bank to follow. They can adjust privacy, if it's programmable, etc., etc. The genius behind federated sidechains is no country is going to have the same rules as another. They can create their own walled gardens with whatever rules they have and on any technology, whether that be a fork of Ethereum or R3 or BIT. But if it has a line of code called a federator that can communicate with the XRP ledger in the center. Now, the rules for the XRP ledger are set. It is open and public where everyone can see everything. The public ledger is ideal for international payments because it's a level playing field. Everyone has to follow the same rules. In July, Ripple announced results of their collaboration with two of the world's leading central banks. The Federal Reserve and the Bank of England both studied Ripple's blockchain solution to improve cross-border payments.
Backed much, and the crypto assets like Bitcoin. And their time has passed to have regulatory frameworks that are as much as possible harmonized around the world. And I do hope that what we now see, that there may be more attention to this topic, translates into appropriate policy action.
Arturo is a fintech lawyer. The OECD released a paper proposing to treat crypto exchanges VASP as the same way banks and other FIs are treated, as pertains to the obligation to exchange customers' financial info with foreign residence tax authorities. The OECD is an international economic organization founded by the United States, the UK, Germany, which sets the standards for international banking regulation.
But look, today my administration is issuing new warnings that based on evolving intelligence, Russia may be planning a cyber attack against us. And as I said, the magnitude of Russia's cyber capacity is fairly consequential, and it's coming. The federal government is doing its part to get ready, but under U.S. law, as you all remember, the private sector, all of you, largely decides the protections that you will or will not take.
If you've been following my work for a while, you've heard the foreshadowings of a cyber attack. You know the financial collapse could happen. What better way to usher this new paradigm in than with a cyber attack? The outdated, unsecure SWIFT is no longer fit. We need a new international payments platform. The bond market, the commodity market, the stock market crashing were due to some external force that we had no control over.
One is oil and gas. Clearly, the Chinese are going to buy Russian oil and gas. It's cheap. They need it. By the way, you see the Indians moving to buy Russian oil and gas in a move that's very convenient for them, and doing the trades not through dollars, but clearing it through ruble and renminbi and other. Okay, so that's going to happen. Two, on the financial side, there's at one level, the big Chinese banks are saying, no, we're going to implement the sanctions. We don't want secondary sanctions placed on us, which would mean if the US and Europe would sanction any entity, not just that does business with China, but any entity you do business that does business with China. So our banks then couldn't do business with the biggest Chinese banks. I think they're going to try to stay just below that line because it's too damaging to the Chinese economy. There's a second piece of the financial piece, which is so important on the technology, is that in fintech, the Chinese are actually way ahead of the West. Alipay, WeChat Pay, the combination with the digital renminbi, what they're doing on cryptocurrencies, they're ahead. And that's partly because, I'll just speak for the US, our regulatory look at our fintech companies has been a royal mess. We don't know who's in charge. Is it the SEC? Is it the CFTC? Is it the Fed? Who's doing this? And how do we, for example, have a rational cryptocurrency market that isn't sort of up and down? So through a number of reasons that are basically self-imposed, the Chinese are better than we are. And I would expect this, not all of a sudden, sometimes these waves start slowly and then you see them cresting. You're slowly seeing the wave where people are going around the correspondent banking system, which is this, traditional bank saying, okay, I know who you are, and then I'm going to send money to you in this other country. And they're saying, well, we'll just use Alipay or we'll go through cryptocurrency. Why would we care? And that doesn't mean the dollar is immediately not the reserve currency of the world, but it harms us a little bit. And you'll see more and more countries moving towards these alternative payment systems, which in 5 or 10 years could end up being really bad for US and Western dominance. Now, that's really technical, but it's a really important point that's
really
not
important.
covered. Yeah.
And talk about.
I do not see the world at all. I invent it. Franz Kafka. Thanks, everyone. I hope you enjoyed the show. Please remember to like and subscribe. Tell me what you think in the comments below. If you enjoy this work and wish to support this channel, I have a Patreon. The Patreon has Discord access, weekly discussions, information, early ad-free videos, and more.